Is America heading towards a recession? This question arises because the U.S. markets are jittery. There was another sell-off on Wall Street yesterday, with tech stocks taking a heavy hit. The Dow Jones and S&P 500, America's largest stock benchmarks, both fell by over 1%. Investors are feeling nervous and are looking for a safety net. Several broad economic trends are contributing to their anxiety. There are signs of distress in the job market, and manufacturing is slowing down. Fresh economic data has heightened recession fears. Let's examine this data. First, employment. More Americans are filing for unemployment benefits, with a sharp spike in weekly claims that have crossed 249,000 for the week ending July 27th. This number has fluctuated between 194,000 and 245,000, but now unemployment benefit claims are above the upper limit of this range. This is worrying because more Americans are filing for unemployment claims than before. New applications have hit an 11-month high, indicating fewer jobs are being generated, which is a cause for concern. Those who already have jobs are not spared from the bad news either. Wages and benefits are growing slowly at a rate of less than 1%, the lowest quarterly rate in 3 years. Unemployment in America remains relatively low at around 4%, but the fresh data indicates that the job market is stressed and job creation has taken a hit. The second concern is manufacturing. Manufacturing activity is slowing down. The Purchasing Managers' Index, or PMI, which measures this activity, dropped to an 8-month low in July, falling to 46.8. Ideally, this number should stay above 50. This decline in PMI is also impacting job creation, with reports indicating that factories are reducing staff or instituting hiring freezes. One reason for this could be the interest rate set by the U.S. Federal Reserve, often referred to as the Fed. The Fed regulates the rate of borrowing and has kept interest rates steady for a year to fight inflation. However, high interest rates squeeze excess money out of the economy. Critics argue that high interest rates hurt manufacturing in America by limiting expansion opportunities. Although the Fed is now promising a rate cut in September, experts fear this could further affect growth. Investors are trying to avoid risk by moving away from the stock markets and towards treasuries, which are government bonds. These are considered safer than the stock market as they offer a steady rate of interest and the safety of capital. The American bond market has seen increased activity, especially after recent geopolitical events in West Asia. Investors are factoring in these risks while making their investment decisions. America's latest economic data points towards weakening economic activity, raising concerns that a recession might be on the horizon. Subscribe to Finvesco for the latest updates on financial happenings.